Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble. Welcome back to Loonie Hour, episode 105. As always, joined with the three amigos. You got Keith Dicker, Icecap Asset Management, in his new Patagucci sweater, and Rich Diaz, Tom Brady Macro. What's going on, Rich?
Not much.
Some Raisin Bran in the corner.
You beat me to it, you bastard. I was gonna move over and hide the Raisin Bran and bananas. You gotta.
What's with the bananas? Like, why do you have, for those who are not watching this, Rich has 3 old darkened bananas and
No, I don't eat
Raisin Bran.
You toss those in the Raisin Bran?
Yeah,
he's very regular these days, Steve. Remember last week we had like all the poo conversation on the episode? Now Rich is more...
We're rotating the camera
away
from the Raisin
every
Bran.
day is a good day with 2 scoops of raisins.
That's right. We should get them to sponsor us.
Somebody commented last week, Rich, that they said that you're like an onion. Like every week there's another layer peeled off, and it's like, wow, he loves ants. He loves Raisin Bran and bananas. That's pretty awesome.
You gotta have a healthy breakfast. It's a good way to start the day. That's all. That's all I gotta say about that. How are you, Keith?
Hey, I just had some travel. So I was just out on the West Coast. So a couple, well, first of all, I want to say the real nice gentleman said hello to me on the plane ride. His name is Drew. So Drew, thanks for saying hello and for following the podcast. That's fun. But so I was out there for some meetings and also went to the football games, the 49ers and Dallas Cowboys. And the lady sitting in the row right beneath me, like 2 seats over, it was Nancy and Paul Pelosi, if you can believe that.
I don't believe that, but that's amazing.
I know, true. Like, we were high-fiving during the game, and she was all decked out in 49ers earrings and stuff like that. So,
do you get any stock picks from her?
Yeah, no. I said, hey, do you have any cool stock picks? And Paul didn't like that, of course, but it was, it was a real...
say that. Come on.
It was a real hoot. They were there for about half. Like, they left at halftime, I think, and you couldn't see the Secret Service.
That was my question. That was my next question.
I imagine there were at least a dozen dudes around that place.
You just see you getting choked out from some guy.
Waiting for some stupid like Loonie Hour co-host guy to say something like smart.
All I wanted was some stock picks.
Anyway, that was my weekend, hanging out with Nancy and Drew. Yeah, get it?
Oh yeah, I do get it. I did like those books. Did you have fun at the game though? They won.
Yeah. It was a great experience. If anyone has an opportunity to do that, it's a lot of fun. So it's good. And Steve, how about your side? What's happening? Yeah, my guys, we'll give another football pick at the end of the day. They might be better than our market picks, so hang around for them if you want to go on that side of life. Steve, what's happening with your airplane these days?
Oh yeah, no, we're just traveling the world here in Mallorca, Spain. I was texting you guys in the group chat. Man, I'm coming around, Rich. Europe, Fantasyland's pretty nice over here.
It's nice, isn't it?
A good story, actually. I was driving up. So we did a rental car. And, they only have, standard manual transmissions over here for the most part. So I haven't driven one of those in a really long time. And my wife wants to go to this, village town that's way up this mountain. And so it's up this super steep, windy road. And the lanes aren't even wide enough for 2 cars to pass. And I'm just sweating. And there's bikers going up these mountains, all these cyclists that are in the way. And it's super annoying. And you have to wait because it's too narrow to pass. So you're going super slow. And I'm just hoping, oh my God, I'm going to get stuck on this hill. And then I'm going to stall out. And I'm panicking, and I go around this really tight corner, and of course there's this massive Greyhound bus barreling at me, and I was like, "There's no way the two of us are gonna pass." So I'm like, "What the hell do I do?" And I'm going so slow, and like we're literally gonna collide. And so I just like stop my car. I put it in like neutral. And I just start rolling down the hill. And so this bus can go around me, and I'm like panicking, like swearing, and
It's like
yeah,
a
that was
Bank of Canada story there somewhere, right? You're going neutral, you're rolling backwards. No?
oh man. And then I had to like get up, yeah, and then I had to like put it back into gear and like hope I didn't, I'm on a really steep hill, right? So anyways, that's
These,
my vacation. It's been very stressful so far,
but the
to say the
wine's
least.
cheap, right?
Wine is pretty cheap.
Good.
The wine is pretty cheap. But we'll get into the markets here. Um, yeah, it's always a tough one to kind of bounce around here, but we're obviously aware of what's going on in the Middle East, and our thoughts and prayers go out to all those impacted. And we're gonna try to keep this to the geopolitical side of things and the portfolio implications. And we've had a lot of questions from our followers over the last several days, basically just saying, okay, what does this mean? What does this mean for us? So, just strictly from a financial perspective. And so, Keith, I'm a little bit curious your opinion on it, given this is your kind of bread and butter. People are saying, could this impact, oil markets, and are more countries going to get involved here? Yeah, I'm really curious your thoughts.
Yeah, I mean, so we the frequency of the conflicts over the Middle East, it happens a lot more than anybody would want to see or know about. So it's always there. And then as it's happening, the probability of it escalating further, that's always discussed as well. But it does, feel and seem like this time that can absolutely happen. And so with markets right now, if you're looking at like the immediate market reactions, so if you go back just, before the start of the few days back, oil was starting to come off a little bit. Equities were getting a bit weak, and, same with the currency markets. And it seemed like we're going towards that normal cyclical downturn, that we've been talking about. But since then, of course, oil has rebounded now. It went up as far, I think we're at 95, weren't we, a few days ago, Rich?
Yep.
For crude oil.
Sure.
And this morning, this is Thursday. I know last week we threw everyone with a loop with a Wednesday recording, right?
Yep.
Last week. So this week it is a Thursday. But now we're back down to like 83, 84 right now. But if this does escalate, investors, I think they should expect, and they are expecting, that the US dollar to strengthen significantly, and that's happening here this morning. But I think this morning that's for other reasons, which we'll go into with Rich here in a few moments. But it's the probability, though, if it does escalate, and other actors become involved, you're going to see oil rally dramatically. Equities will sell off. Other commodity markets, they should do okay, depending on which ones, but it would clearly be one of these risk-off events. And then if you overlay on top of it, then because equity markets do well in the first half of the year, and people want to take some profits, and then we're starting to see losses come back in over the last, the correction over the last few weeks. You could see that even snowball a bit more. So it's definitely a market right now that, I know for us at IceCap, we're positioned. We wouldn't be that affected by these events because we're positioned for it anyway. But it could be something that could accelerate, and tracking a lot of other managers, and everyone is, they're all worried about it. That's for sure. What are you seeing, Rich, from your desk?
I'm actually kind of surprised how muted the reaction in the oil market has been. I think that would be the first takeaway. I mean, obviously on Friday, what we witnessed is not great. Obviously, it was quite horrible. And then obviously the reaction that was inevitable. I'm actually quite surprised that, given what we've seen over the last few days, that the oil is basically back to where it was on Thursday. And so for me, that was, like, obviously it's the Middle East, but there are other geopolitical implications with respect to Iran and Saudi and on, like it cascades, of course. But the point really is that there's so much, I mean, it's a tinderbox. It has been for a long time, but most importantly, so much of the world's oil supply basically is within, 1,000 or 2,000 kilometers of that area. all the pipelines that go through Egypt and then obviously then you can throw in the Suez Canal in there, and it just goes on and on, sort of the geopolitical and trade implications specifically. So I'm actually really quite surprised that at $84 a barrel in WTI, it's basically just been a blip, which is kind of horrible to admit and say, but it is true. The other thing that really struck me is that, the U.S., this is not a political show, this is an economic show, but I think it's important to sort of highlight this. The U.S. is, as usual, it's, staunchly behind its allies, but now you've effectively sort of doubled the size of your theater. And the reason I'm bringing this up is because a very famous investor, Paul Tudor Jones. Sorry, I'm screwing up his name, but he came out
and he can't be that famous, Rich, if you can't get his name out.
But he came out and he highlighted the fact that you've got sort of one theater, which is the Russia-Ukraine. We understand where U.S. and many of the Western allies sit on that. You've got the Israel Palestine thing, which has been going on for a long, long time, but is obviously quite an important flare up now. And then you've got sort of the panda in the room, which is a Taiwan-China thing. And then that's so now you've got you have two for sure theaters, and then another potential one at a time where the US is actually in a very, very weak fiscal position. And its relative leadership in the world is changing. And it makes for a very, very difficult, I think, investment sort of, use the word again, but situation, and like it just complicates things a lot. I think it also, a lot of the things you talked about, Keith, where you're talking about like deglobalization, I think it's sort of it might accelerate those kinds of subjects. I also thought that, and then most cynically, I'm actually really surprised that the defense company stocks basically didn't rally at all. So anyway, those are sort of my three takeaways. I know it's a little bit garbled, but it's a difficult subject, obviously, to touch on, and we're still so early. Really, we'll see what happens.
I think though it also demonstrates that with your savings and investments, it's one thing to always talk about these fat tail events that may or may not occur, but as the probability of them occurring, it does increase. You actually had to have positions in your portfolio that will help you out, right? So, and that's the world that we're, I think, those that know our ice cap view, we believe that the financial world has shifted dramatically, albeit very slowly, but it's now made that transition, and you have to be prepared because when any country or region becomes destabilized financially, it automatically spills into other parts of our of the world as well. What do you have there, Steve?
Well, yeah, just to Rich's point, I actually did see that Paul Tudor Jones interview. Essentially that obviously the US has been kind of the and I'll call it what you want, protector of the world, so to speak, as the that's sort of the pact that they've enacted with their as the world's reserve currency, but and now obviously with the bond market challenging them, right? So for them to go out and fight all these wars, or to be involved in these wars, with the bond market obviously already putting pressure on them, given the horrible debt situation in the U.S. on the government side, that it puts the U.S. in a very precarious situation, while it's also trying to tamp down inflation, and obviously wars are inflationary.
The other thing I thought was interesting was that relates sort of to Janet Yellen's comments, and I know we're jumping out around here again because you've got higher interest rates, you've got a situation where a lot of that debt needs to be rolled over. You've got the CPI print, which we're going to get to in a little while, and then you have Janet Yellen saying, "What, Steve? That interest payments as a percent of GDP we're going to be lower than they are now," which I think was very rich.
So Janet Yellen says debt service costs will be 1% of GDP for the next decade. That was her comments. Do you have the exact? What are they at right now?
Steve, I asked Nancy Pelosi about that, and she wasn't aware of that statement that was coming up, so she couldn't have traded ahead of it at this point.
What are they at right now?
Found that funny.
It's for people who may not know, so Nancy Pelosi is a senator. or is that a congressman? I always screw that up. But anyway, so she has basically an incredible track record trading U.S. stocks. And this great Twitter follow called Unusual Whales has basically been tracking her and every other congressman, so Senate and the House, and what they've done, and the returns that these people have gotten over the years have been spectacular. And so effectively, what the Unusual Whales is alleging is that these congressmen and women are trading on insider information. I would never make such claim, right, Keith? We don't want to get ourselves in trouble, but it's
Well,
quite
I don't know
suspicious.
if the law has passed, but they are not exposed to insider trading.
They're technically not breaking the law, which is of course ridiculous.
Yeah, absolutely.
But anyway,
but let's go back to the Janet Yellen comment. So she, her comment was that I think over the next decade, I think it was, that the amount of money that the U.S. government have to spend towards servicing their debt was going to be average about 1% of GDP. I think that was the exact.
Yeah. So
phrase,
basically, if we assume the average borrowing cost of 4.75%, which is, I believe, where it's at today, which is a little bit below current weighted average funding cost of the government. Under the realistic picture, the interest expense would climb to 5.6% of GDP, assuming 4.75%. So essentially what they're saying is the only logical variable in the equation that can make Janet Yellen's correct is the future interest rate. To arrive at Janet Yellen's 1% figure, assuming debt grows at the rate of GDP, interest rates must be much lower. So they'd have to basically, in a time-weighted average, interest rates have to be about 0.85% to get the nation's interest expense down to 1% of GDP.
Yeah, it's bogus. It's never happening.
So she's basically, essentially, she's obviously trying to, assure investors or assure markets that they got everything under control and that we're basically going back to a zero interest rate policy.
Well, guys, but she's also she is one of those swamp creatures that we
that you met
hear and read about. So she is extremely political. She's not this, nice little old lady who sips tea and she's
thoughtful pretty cute,
about
though.
the world.
But
she sounds like Milhouse from The Simpsons. If you've never heard her speak, Google Milhouse from The Simpsons and then Google Janet Yellen. She sounds exactly like Milhouse from anyway. Sorry,
same voice. But with her, obviously she used to be, she was chair of the Federal Reserve, but now she's on the political side directly. She's the head of Treasury, so she's the FinMin, Secretary Treasurer for the Americans. So that's a political appointment. She's clearly leans left, Democratic. And, there's not very many positive data points coming out of the U.S. right now politically. So she has to come out and say things that may help, because it may help the Democrats out coming out for the election in 24. So, whether this can be achieved or not, it's irrelevant. Every single, as you know, Canada's the best in the G7 at everything that it needs to be the best at.
We're going to get to that.
And yeah, we will, of course. But I don't take those quotes very seriously. But again, with everything, though, it's a good point because when you see data points come out in news headlines, you just can't take it at face value. You have to say, okay, who said it? Who's publishing it? And then you say, okay, why are they saying this now today? And if you piece all that together, life isn't bad. You get a much clearer, your vision of the world becomes easier to see.
But the broader point that Tudor Jones was making, I think, was that we're getting into some uncharted waters. Like, I've been reading articles about how, the end of Pax Americana, and we're now entering like a bipolar world. Before you had two superpowers after World War II, then you had one superpower, and now we're having two again, and the relative importance of America is coming down from a military perspective. We've talked about the reserve currency aspect. That's also part of this conversation on some level. And the idea that the US is getting stretched thin and does not have the help from a military standpoint or certainly an economic standpoint from the Europeans at all, is interesting. Like the center of gravity of the world from an economic standpoint and a military standpoint is shifting away from America. And that's going to have a lot of implications in capital markets, for interest rates, for inflation, Yeah, it's a fascinating, if a little bit uncertain time, I'd say.
So the other
Well,
interesting thing about Paul Tudor Jones is that he actually has 4 scoops today, Rich, not just 2. And that gives him the clarity to see
that's the
these things.
difference maker right there.
It is. It's really helpful.
That's what I've been doing wrong. Okay.
So
I also eat apples. Apples I also eat regularly, if that's, just in case you're wondering.
thanks
And
for
what do you do
thanks
for lunch?
sharing.
Like, do you go for, is it just like a low carb kind of diet these
No,
days, or lots of
sushi. I
protein?
love sushi. It's my guilty pleasure. Anyways, Steve, get us back on the
Sashimi
rail.
or rolls? Do you like go
The
for
rolls,
just
the seaweed rolled things.
yeah.
Yeah. Anyway,
Okay, let's
Steve,
get back to it then.
save
Well,
us.
yeah, well, to Janet Yellen's point, which is, she thinks she's going to get rates back down to a more tolerable level. One way that she's going to need to do that is for the data to cooperate, obviously, on the inflation side. And so we had the latest U.S. CPI print. Rich, you want to walk us through that?
Oh yeah, but you have to stall while I pull it up because I lost it on one of my screens here. Okay, here we go. So what we talk about a lot of is expectations. So today we got so it was basically higher than expected. So the month-on-month number was 0.4. Core was as expected 0.3, and so the year-on-year number, which is so CPI index, but 12 month on 12 month or year on year, is now 3.7, and core fell to 4.1%. So of course, there's this great guy who we follow on Twitter who basically said, it was great. It was basically the CPI was a good headline number, e.g. was falling, except if you remove core. And then he went on to list like 30 of the items. So basically, it's just what we've been talking about for a long time, is that inflation basically is not going down. It is sticky. And that the Fed is going to have to remain hawkish. I don't know. That's my first takeaway. Keith, did you want to just jump in there and add something while I look up the data?
There's nothing to add. You were right on. What else do you have there?
Well, I've got.
Oh
no, but just I will add on to that. But Rich is correct. It was the data suggests that the Federal Reserve, they may continue to hike, or at its weakest thing, it won't be cutting rates anytime soon. So that this was a very US dollar positive move this morning, and the dollar is just ripping higher here today. Everything is getting mullered versus the dollar.
I've got a few thoughts on that. Just this is something that I've been kind of all over for a while. Obviously, coming from the housing side of things, we've talked about the differences between Canada and the U.S. on the real estate side, particularly where the rental market is going. So if you look at CPI and its recent report, so it says the shelter index increased 7.2% over the last year, accounting for over 70% of the total increase in all items, less food and energy. But if you look at real-time rent indicators in the U.S., from sites like Apartment List and Zillow and whatnot, Apartment List has September rents dropping the most on record, at least since basically the depths of the pandemic. So, again, at the end of the day, obviously we balance this out. Maybe shelter starts falling further in the months ahead. Maybe oil goes back up. It's obviously very, very hard to project where it's going to be. But I think the reality is just sort of getting it back down from 3.5 back down to that 2 level, or 3.6 or 3.7, whatever we want to call it, is going to be the real challenge. And then, so I guess the ultimate takeaway here is that I mean, correct me if I'm wrong, but basically the market takeaway is there's not enough here for the Fed to necessarily hike rates further, but there's also not enough here for the Fed to say, okay, we're in the clear when you start cutting rates.
Exactly right. So I think it's important. So that shelter component is just that. I mean, I'm quite proud to say that we were on this probably from the first episode of the Loonie Hour about that shelter component. Like it or lump it, I know it's flawed. And Steve, you were always right to bug me about the rent component and how it's not fair. And I get it. But the fact that it's 0.6%, it's actually rising again. Sort of corroborating the price action that you're seeing on the Case-Shiller price index for the 20 cities is starting to rise again. It's going to be really, really interesting. That I think that's going to continue to prop up the number. Again, we understand the flaws in the CPI. The other thing that I wanted to point out, remember we used to talk a lot about used cars and trucks? which is something you also highlighted a lot. That was the other thing that fell negative 2.5% on the month, which I thought was which is actually a huge drop, right? So if you do that 2.5 times 12, someone in the comments can
you have
help
all
us.
all these car companies have been like
Yeah.
coming out publicly slashing their price. I think Tesla's dropped their price like 3 times this year.
Right. The other thing is, remember a couple of, I just want to say a couple months ago, a couple weeks ago, we talked about the delinquency rates, excuse me, for the auto loans. I read somewhere something like, the average car price in America is like $700 or $800 a month, which is just crazy. And you're seeing delinquency rates rise for that. So it's interesting to see how there's still strength in the consumer sector from personal consumption, but the delinquency rates are rising everywhere. There's like all kinds of sort of cross currents that are happening. And then the energy piece, Keith, I don't know if you want to jump in there.
On the energy piece? What do you
Well, just
mean?
like in general, I don't know.
You sleeping again?
I'm just trying to keep you on your toes, Keith.
It's my nap time, guys. As you get older, you need a nap. I mean, the final thing with me with the inflation data, I mean, most of it is, as Steve, I think Steve, you said it better today. It's not bearish, or it's not dovish at all. If anything, it gives the power to the Fed to not do anything. But the one, if anyone's looking for a reason why they may cut rates, or maybe they've already peaked, is if you're looking at the real average weekly earnings. Last month got downgraded a little bit, which means it slowed, and then this number was actually a little bit of a negative number as well. So I mean, markets right now, equities are kind of flattish, on this. They're down from the pre-CPI level, but equities are a bit flattish, but the currencies are the one this morning that are really telling us, hey, the Fed is still in the hawkish mode.
What is it, like 13 straight weeks of dollar up, US dollar up? It's a record, isn't it?
No, that wouldn't have been a record. I doubt that, but it's still very strong. Is it really a record? I mean, we went all the way to 115 last year, or
No, I think it was a record in terms of the consecutive number.
Oh, okay, sorry.
Yeah, I don't track it that way. It could be though.
I mean, it's probably a stupid thing to keep track of realistically, but anyways.
Well, I think Rich,
if
Rich
it was on
loves
Twitter,
numbers.
it must be true.
Rich loves numbers. I'm sure he can tell you there might be other equally as stupid numbers.
I have loads of stupid comments if you'd like me to throw in there. But before we jump into that, I think one thing that kind of that's interesting, but on the labor market piece. So Keith's right about the real wages, but on Friday, we normally record this on Thursday, and last Friday was the non-farm payrolls, and that absolutely smashed expectations. The wrinkle there, though, is that a lot of it was part-time jobs, and that's the thing that sort of gets hidden in these numbers. So it's not all good. It's a weird spot we're in, I think.
Well,
but hey,
it's funny.
We also missed the Canadian random number generator jobs report.
I have to eat another Twinkie.
It was a big blowout. Yeah, we did miss that. Thanks for reminding me. Who's up Twinkie there?
I was off. I think Rich won.
No, I lost because it was like I said minus 40 and it was like 65 or whatever. So
I think I was over there. The random number generator.
Yeah, I'm looking at it right now. It was 63.8 and I guessed negative 40.
So, I don't know. Something those numbers. I don't know.
I think whoever eats the Twinkie is a winner in my book.
Yeah. So on that US inflation, I still really go back to, I love this site, trueflation.com. So it's, there's people that are all like tinfoil hat, don't trust the government numbers. Fair enough. But I go back to Trueflation, which is a private sector model that was created, I believe, in 2020. And so they've really had, like, Trueflation has been hovering around the low twos really since about this summer. So right now it's still at 2.37. What is pretty interesting, though, right? Again, 2.37, not to say the damage hasn't been done. So they just updated their models, and they now have a U.S. inflation rate aggregated. And so they said the average American purchasing power has been eroded by 20.4% since October 2020. So over the last 3 years, we've seen cumulative inflation of 20%.
Yeah.
Which I think all passed the smell test.
I thought I'd say it'd be higher than that even. I know, but and I wonder what maybe I'm just
Think like
thinking
the
Canada.
typical thing, like your day-to-day life, like things are about 20% more expensive
You
than
think?
they were 3 years
Oh
ago.
no, I'm sure. I'd love to hear what people have to
You think
say.
it's more
Actually,
than that?
yeah, I
Keith,
think it's
what's your
way more than
opinion?
that.
Yeah, I think it's a lot more than that. It's
Really? Okay.
more than 20%. I mean, I know
20% over
things
the
that
last 3 years, right? So, I mean,
yeah, but I mean, I
seven,
know
So
things have.
seven,
I bet
call it
you
7% growth.
beef beef has doubled in price.
yeah, it has.
Absolutely.
The CRB indexes for live steers has doubled in 2 years.
I see lots of like household product things have doubled in price,
Your
and
Samsung TV's still getting cheaper. You eat that.
Yeah.
but like another way to look at inflation, because we get sort of lulled to sleep with the percentage change all the time. And now that, let's just say it comes back down to 2%, there's going to be a lot of victory laps being taken place by the Bank of Canada, as well
And
as
say it.
everyone's favorite G7 country, that they're going to take a victory lap as well, because they're saying, oh, now inflation is down to 2%. But if you're good with numbers, which most people
We
are, again, you can pull up here just the so it's down to the US. It shows US CPI, urban consumers, non-seasonally adjusted price basket. So it's not showing change. It's just the index itself. So it's like a stock market index for prices. And of course, it goes up over time. It has to. But the level that it's increased over the last 3 years, it's about a 25% increase, but nowhere is it going to be showing that it's declined. If anything, the growth might slow. And so this, 25, 30% increase in prices over the last 3 years, which, by the way, it is what it is. And people, you can't say that anymore. But all the inflation we have today is completely due to the policy responses from the COVID pandemic, both the fiscal and monetary and political decisions. Those are the decisions that have created so much suffering for our households today. And it's inexcusable. But this is where we
Yeah.
are. So if you
Well,
think prices, you think the scope mouthwash is going to drop back down to $3 again, forget about it. It ain't happening. It ain't happening.
Totally. And I think that's the point that I'm trying to make, and hopefully people don't misconstrue that. That again, just because we get headline inflation again back down to the goal target, maybe it's 6 months from now, maybe it's 18 months from now, but when we eventually get back to 2, it's not to take away from the pain that's already happened. Of course, we've touched on that many, many times, but
so the correct thing, like to get things back to where we were, before the COVID year, we would, I don't know the number, Rich, but we would need to see deflation of, say, 5% a year for the next 3 years.
Yeah. Or you'd have
maybe
to see
10%.
Or you'd have to see wages, real wages, i.e. wages that account for inflation, be 5% a year, where that scope mouthwash might still be $6, but you're making so much more money that it feels like it's the same. You haven't lost in purchasing power. And I'm going to go out on a limb and say that's not going to happen.
It's impossible, because if any company now has to, say, raise their the compensation packages by 5 or 10%, you automatically have to raise prices, because if not,
Right.
your profit margins come down.
Right.
And despite what a lot of governments will tell you, profit margins they tell you it's not important. They are incredibly important. And if you're not making enough money then to reinvest into your business, you end up going under at the end of the day. So I don't know. We're never going to go back to those 2019 and earlier years with prices, unless we get the mighty depression or recession coming up, the hard landing. Hey, Steve.
well, there's a lot of people cheering for depression on Twitter. It's a bit gloomy out there sometimes.
Careful what you wish for, is what I would say to those people.
Speaking of funny reports, there was a report this week from the IMF, the International Monetary Fund, which is essentially the central banks of central banks.
No, that's the BIS.
what the hell is the IMF then? It's not the same thing. I know about the BIS. Well, they're pretty much
they're related and they work together, and I'm sure they have the same political views, and they both wanted us to eat bugs and have central bank digital currencies. The central banks, the BIS is literally the Bank of International Settlements, and that's the central bank, and they more like a regulatory body, and they do a lot of the IMF is a funding body, so they fund stuff outright. But anyway, it doesn't
right. So when
sorry.
Yeah, when these countries are essentially in need of a bailout, the IMF effectively comes in
with their clause, though. With their clause, don't forget the clause.
We'll give you the
well,
money.
As people might know as well. So when after World War II, they created the IMF, and it was agreed that the Europeans would head that group. But they also created the World Bank, and that the Americans would always control that. So the World Bank was created. Basically, it was an American investment feeder fund, to rebuild Europe effectively. So then over the years, the leader of the IMF, I think it's always been a European. I don't think it's ever not been. And the World Bank, it is controlled. The BIS, I know people say it's the central banks. It's really, they just calculate the data from the central banks.
It's
like
they're never, the IMF is a more.
They're never going to tell Bank of Canada what to do, because that's what other people will do.
But keep going, Steve. Sorry.
Yes. Well, the IMF, just for those keeping score of if the swamps are connected. Christine Lagarde, who's now head of the ECB, was previously the head of the IMF. So there is definitely a connection there. So they put out a bunch of forecasts, and so they put out a forecast for World Economic Outlook for 2024. And they've said that Canada is slated to have the highest GDP growth in the G7. So Canada's
over what time frame?
For all of 2024. So the projection is for next year. Canada will have the largest growth rate at 1.6%. Yeah, 1.6%.
And what's the lowest? Who's Japan? I guess is the lowest. Is it?
Well, I can try to pull it up for you here if I can.
Or Italy.
It is. Well, the UK is not looking too good, Rich. 0.6. It looks like they got the UK 0.6.
What's absolutely hilarious about that 1.6 number is our population growth is really, really high. So what they're essentially saying is we're all going to get worse off, but that was not.
What's the population growth again? It would have grown at 2.7 last year.
No. It was 3.14, which is absolutely bananas. But then they revised it. So let's just let's be generous. It was like 2.9 or whatever it is. It's so nuts. Anyway,
how many bananas do you have on your desk? Is it 2 or
7?
So that's the projection from the IMF.
It was fun. Like I remember as a kid, though. We had cartoons. That's what we watched all the time, and then Abbott and Costello. You don't remember those guys. But like there's always somebody in these cars. Like if someone's chasing you, like a bad dude, like on Scooby-Doo or something, you take a banana peel and you throw it behind you, and they slip on it and fall, right? So that when we were kids, if you ever saw a banana peel around, you just run away because you knew that was horrifying. So I was out walking around with Mrs. Icecap there a few nights ago, and you know what we saw on the sidewalk? A banana peel. So we both of us quickly we turn around and you run away because at our generation you had to be terrified of banana peels. So Rich, don't throw those banana peels around.
Are Elvis and Costello the people who tamed the tigers?
Abbott and Costello?
Yeah, they're the guys with the tigers, those big white tigers in like Las Vegas.
No. These guys did the black and white films
okay.
out of America.
If you guys were funny. Keith, if you were to make some projections, in your opinion, this is the Ice Cap opinion, strongest growth next year
in the G7?
Yeah. IMF says it's Canada.
Yeah, I'll go with the USA.
That's easy.
USA.
Who do we go last? UK, Japan, Italy?
I'd say Germany for me. That's my bet. I think Germany's in really big trouble. We don't talk about that enough, but their manufacturing industry isn't getting basically their ass handed to them. by the Chinese on the auto front. The Chinese became the world's largest auto manufacturer. They're selling EVs aplenty, whether you like them or not is irrelevant. That's what they're doing. They're selling them all over the world, and they've pivoted. Germany's insisting on turning itself into a pretzel because of climate change and all kinds of crap. And so their energy costs are still really high, although they have come down. They're restarting coal power plants. I mean, it's just they're not. They're if you look at competition indices, so if you look at like productivity indices or the cost of unit labor cost numbers, the rest of Europe has caught up to them. So they're not as productive. They're not generating the amount. They're not like they're just in trouble, sort of like in different segments and for different reasons. And it's not clear that they have the leadership sort of to tell people hard truths about their energy policy. To the point where I think if
they're more exposed to global trade as
right.
opposed to domestic, I think the Americans have a stronger local economy, regardless of where they're getting money to spend. Everyone is spending their credit cards and stuff. But Rich's point is fair with the Germans. But at the end of the day, though, it doesn't really matter. I mean, you don't use an economic forecast to forecast the stock market as an example. Yeah, you have to sort of say how everything is going to move and shake out. But go ahead.
Well, no, I mean, I find it just interesting, right? I mean, this is always the tough thing with like markets and economies, and like these are very complex machines, which is like, I mean, I'm curious, like how many PhD economists the IMF has on staff, and like this is the report they come up, and I sit here in Canada and go, really? Like Canada is the number one. I don't know if anyone's like watching Canada in the G7 has the highest levels of household indebtedness in the G7. So, they're most susceptible to obviously to interest rates, going up and staying up. And so, it's like, well, are they factoring that in? I mean, I'll take a interesting stat here for you just on, we've talked about the mortgage renewal in Canada. So 2024 and 2025 are the largest mortgage renewal years for this country. And so until August of 2024, on average, each month, 1% of all mortgages in Canada will be renewed. So there's 7 million. There's about 7 million mortgages in Canada. 1% of those per month will be renewed. So there's 70,000 mortgages per month that are going to get renewed. And again, if you took a mortgage out, in 2019 and you're renewing in 2024, you're going to be seeing a minimum of a doubling of your mortgage rate, assuming rates stand. And then from August 2024 to July of 2025, you're going to see about 105,000 mortgages a month getting renewed. So really kind of towards the end of 2024 and into 2025 is a huge amount of households that are going to be stuck with large payment increases.
I mean, the challenge with all of these forecasts, whether it's the IMF or a central bank or even, Wall Street and Bay Street, they never, ever forecast a fat tail event or a recession. Like, for example, the last 4 recessions in the US, the consensus economic forecast has always been positive. But they never expect these things to happen. So if it is a normal economic cycle, then, maybe we hit these numbers and whatever. But with the probability of the world experiencing, of not experiencing a regular cycle, all these numbers, they won't mean anything. You fast forward 1 year. Make sense? Yeah? No?
Yes, sir.
Yeah.
Yeah,
yes,
I
sir.
think, people just say the constant rebuttal that I get is, well, okay, you bought in 2019 and you're renewing your mortgage. You got so much equity. Why don't you just sell? Go sell. And take that equity and you don't have to worry about it. It's just like, I just don't think like the vast majority of Canadians don't function like that. Like they'll cut everything else that they have to in order to continue to service the mortgage.
Yeah, absolutely.
Right. So it's like, and so again, even if you were hypothetically just sell, I mean, I can tell you right now, like the housing market is not great. So if everybody just has the same mindset, I'm just going to sell, you can imagine how much inventory would be coming to market and what would that do to pricing? So general, that's my thoughts on the IMF forecast.
think just for people in my world, I think the IMF forecasts are basically bogus. They do projections that are 5 years out, 10 years out, and I don't think I've never really met anybody in my space that takes them seriously. What they are very, very good at is calculating sort of the boring stuff. That's just less, I don't know, less contentious, and that takes sort of, I don't know, how do I say this? Less hope, as Keys always says, a strategy. So things like current account balance, exports, trade, they do nominal effective exchange rates, so trade weighted exchange rates. They do really good productivity calculations. They do really great debt stuff. They do budget balances. They do net budget balances, so excluding interest payment. I mean, there's a litany of things that they're very, very good at, and that people in my world take very, very seriously. The forecasts are not one of them. I think it's important that we discuss it so that people understand. And there are smart people, but that's what the BIS is so powerful for. So the BIS will do the similar things. They'll do cross currency and cross-country claims. So the BIS aggregates sort of, let's say, all the banks in Canada, how much exposure they have to the US, or how much exposure they have to Europe, or how much all the banks in Germany have exposure to, Portugal, Italy, Greece, and Spain, or whatever. It's really horrible. They're called the pigs. So they used to call the pigs until everybody got too sensitive to make good acronyms. But so that's where these kind of organizations are really powerful and useful. World Bank data has great stuff on energy, on coal consumption, and how it's not going down, and those kinds. But as far as the forecasts and where they think, like energy is going to go in 5 years, I mean, those largely are ignored by people in my industry.
Well, I think
so what's our overall message here then? So the IMF is saying Canada's going to be awesome, and we're just saying it doesn't really matter, right?
No, I mean, I think we bring up these reports just to kind of dissect them apart a little bit, their forecasts. It's really just to kind of help people think for themselves, right?
Yeah, I agree.
We just to have a to be able to critique something that comes out. If you're reading a news media headline, to be able to think about it and actually critique it and figure out, what is true or what isn't, or, sometimes it's not always black and white, but sometimes it's just the ability to sniff out BS. Yeah. And I think this is kind of one of those ideas. And again, it also, I think, to me, shows the ability of people to forecast. I think so many people just put all of their faith in, the institutions, and the reality is the institutions are making guesses as much as we are on this show, right? We're trying to make educated guesses. Right? Like the Bank of Canada, we're going to hold rates at zero for a very, very long time. It was an educated guess at the time. And, it's an educated guess now that they're going to keep rates for a very, very high for a long time and not cut anytime soon. It's an educated guess until a fat tail event comes along, like we've been talking about on the show, where suddenly the course has now changed, and your facts and your worldview should change with that.
Well, I'll tell you one thing that isn't a guess, and that is the 49ers football scores. They've been pretty accurate so far. We'll come back to that though in a little bit.
We'll come back to one of the ones, Rich. We keep kind of get into this because I want you to continue to hit it home, obviously. But we talk about all these forecasts and people just reading a headline. I still think at the front and center here in Canada is really this energy transition stuff.
Yeah, it's not going to happen. I mean, I have this conversation with some of my best friends who, have absolutely drank the Kool-Aid, and it's a real shame because they're very, very, very smart. And, recently we actually made, we have this WhatsApp group, and it's, God help us if it ever becomes public, because we're all going to be, strung up somewhere. But, the issue is, I mean, they're absolutely convinced that we're just going to.
But doesn't Facebook own WhatsApp?
Yeah, but it's encrypted, I think. I hope.
Right.
Well,
nice knowing you, Rich.
It's nice knowing everybody. Thank you for listening. But no, I mean, so the conversations that we have are about the electricity, the transition, and my very well-meaning and very smart friends, are basically convinced that we're just going to shift painlessly and quickly away from fossil fuels. And as someone who really does a lot of work on this stuff, I can just assure you, ladies and gentlemen, this is not happening. And the reason it's not happening is what I've said many times before, and I will say again, is that it doesn't matter what people in the West do. We are not where the center of population is growing. We are not the problem. I'm not saying that Asia is the problem. I think they should exploit fossil fuels to basically improve their life and lot in life. But it's just fundamentally that is where we need to focus our energy and our efforts. And when you're looking at the data, that's what we should be looking at, how China's consuming, et cetera, et cetera. So that's just sorry, Keith's cut my rant off, but there you go.
What's the response to that though? Like when you share that, like say Canada's production of carbon emissions is 1.5% of global. And it's if we cut ours in half over the next 10 years, total global, it's still going to increase because what's coming out of China and India. In other words, it's irrelevant what we do in Canada, but yet we're paying maybe 10, 15, 20x more in carbon taxes than anyone else.
So, yeah, I think, I mean, my views on nuclear power are very clear. My views on natural gas are very clear. I think what's the dangerous thing that we have is a situation where people, it's like, it's turkeys voting for Christmas, right? You have a situation where you think you're doing a good thing, but really what you're doing is you're effectively hurting the working class people in this country. What we need to do is increase our productivity growth. That is the only way that and separate our GDP from emissions, which by the way is already happening. It was happening before the carbon tax was implemented. And so you need to be able to grow your economy in such a way that it's not affected by emissions or fossil fuels. That is happening. How do
your friends react when you tell them? Like what's because in my mind they represent the test group.
Yeah, they do, and I think that the argument I always get pushback is that battery storage, and and its efficiency and it's cheap, and I think that sort of you're basically basing entire policy framework on a hope and a prayer. And I think that's a very dangerous way to, run your country. And I think it's not necessarily clear that that's a good allocation of capital. And that's what I try to do. My job basically is to try to be an efficient allocator of capital. And it's not clear that, when we have alternatives that are provable, that we just consistently ignore those in favor of something that just feels right because it sounds nice instead of doing the things that we know work.
So maybe instead of having a carbon tax, here's a suggestion for people to discuss, and any policymakers on the line here. You make it at the end of the year, it can be a taxable, some kind of a donation to the climate fund. So if you believe strongly in this and you think you're going to affect the world with change, then, if you're estimated to pay $2,000 a year in the carbon taxes, then, hey, pay $1,000 if you want, or 2,000 or 10,000. And let's see, who's really supporting it then at year end. And I think first you start with politicians. You want to see what they're contributing. That's my point there. I mean, one of these episodes coming up soon, I'm going to bring the Canadian Tax Act here online so people can actually see it. I don't know if people have ever seen it before, but go to your library to get it or buy it online. And this thing is a thumper. If you're driving a pickup truck in the wintertime, you got to load up, put weight in the back to keep you steady. Steve doesn't know that living in Vancouver, of course, but everywhere else around the country, you need to do that. Just put a couple Canadian income tax books back there and you'll see it. It's a different system, guys. It's just not. If you're not happy with it, then just change it, right?
Keith, there's one last thing on the just like the amount of money that we've given to rich people basically to make marginal changes in their lives. If we had allocated that to building hydroelectric dams and nuclear power plants, or pipelines for natural gas, like those three things, they're not sexy. You don't win plaudits from the World Bank, but they're effective. They're effective at doing what the stated goal is. And so but the problem is they're just not fun and they're not sexy, and you can't hug a polar bear and put a badge on your car because they're boring. And I think that so many of the answers and the way we're going to solve this problem, if you think it is a really big problem, are boring answers that are not going to get you clicks and likes and follows. Anyways, that's
Steve.
my
So
last.
Rich, we've talked a lot
Would you
about
vote for him? I'd vote for him, man. Would you?
You're in. Rich, we've talked a lot about that Doomberg guy, but he wrote a really good piece on this, which is like he basically asked the question, is the stated goal for, let's say, if someone's very like concerned about climate change, right? Is the stated goal to stop burning fossil fuels, or is the stated goal to lower emissions? They just asked a very simple question, like, are you against burning fossil fuels, or are you against emissions? And basically what he's saying now, he's saying, there's this great, obviously they got carbon capture technology coming out and getting better and better. They now actually have technologies that are in place they're coming down the pipe to actually pull like carbon out of the air. So he's like, but like, and apparently he said that all these environmental groups are against it. But he's like, well, why? And so it's a very, very good article because it's like, well, if you actually want to lower emissions, this is a very, very, very good tool. But if you're actually just against fossil fuels just because you don't like fossil fuels, then of course you're not going to like it.
But it's the nature of the beast. It's like not to make maybe this is the wrong comparison, but it's like the war on terror. It's a meaningless thing. Like when George Bush came out with that, a lot of people were a little suspicious because it's like it becomes a moving target. It's an amorphous blob that doesn't mean anything. And so, for example, I've made this point many, many times, like fracking is what killed coal in America, and fracking is what lowered emissions in America. But, in England, they don't want to frack. So they're burning fuel. Like nuclear power is what can lower emissions in Germany, but they don't like nuclear power because it's gross and icky. And people basically don't understand physics. And so I agree with you, Steve. That's why this language is dangerous. And I think it's what Doomberg does such a great job at is pinning people to the board and say, what exactly are you trying to address and how do you address it? And here are some concrete examples on how we can do it. And Keith, thank you for trying to triangulate me, because you're right. There are some clear and obvious examples of how people have done it successfully. And
on the Doomberg point, he has actually written a couple articles on Canada's ability, particularly in Ontario, to really ramp up nuclear production. And so, he's very much on that side. I think we'll have to get him on. I think we'll try to reach out and see if we can get him on the show. Because I think it would be good, as Canada is really, an energy. Well, it could be an energy powerhouse.
Well, we are. We're the fourth largest producer of oil in the world, and one of the largest producers of natural gas in the world.
Could be better.
Could be better.
Could be better. As we'll leave it there. I do have a last little show note here. We have officially booked our venue for Toronto. So the event will be on November the 30th. We'll have more details, and tickets will be released in the coming weeks. Now, if you do want early access to the tickets, we'll go to Loonie Hour subscribers. So you can subscribe to the Loonie Hour Substack. Then you'll get, we'll announce it first and foremost to our Loonie Hour. We want to incentivize people that have obviously been following along, have subscribed, and a little benefit there to those on the Substack. So as always, we'll have more details on that in the coming weeks, and we'll see you next week. Just joking. We've got Boomers, San Fran, 49ers. We couldn't let it go. What's the forecast?
What do you think it's going to be, Rich? So, Rich, they're playing in Cleveland against the Browns on Sunday afternoon.
Are you giving me a chance to jump in?
Yeah, I'll give you a chance. Okay,
so my forecast for the football game should be taken as seriously as the IMF forecast for GDP growth. Do I say the number? I think San Francisco is going to lose. How about that?
Okay. So for everyone else, you take the opposite of that. This Cleveland has the number one defense as of right now in the league. Their offense is not doing very well. So the first half, San Francisco, they should grind out maybe 17-20, and then it becomes very one-sided in the second half. So final score, I have the 49ers at 40. and the Cleveland Browns at 6. So there you go.
Blowout. All right.
Another blowout, 40-6.
All right.
Now
And
you can end the show, Rick. That's right.
now we can officially end the show. As always, thanks, guys, and we'll see you next week.